If there is one interaction, everybody, including me, we all look forward to on ET Now, is Mr. Rakesh Jhunjhunwala's view on economy, world, and more importantly, life. So with a short introduction and with a zing in my voice, let me welcome Mr. Jhunjhunwala, India's most admired and India's favorite investor. Mr. Jhunjhunwala, fantastic to have you in ET Now. Thank you for joining us.
Thank you for warm words, Nikunj, and I hope I'm able to live up to them.
Mr. Jhunjhunwala, let me first get your thoughts on the union budget. Now, the union budget, do you think both in terms of intention and also in terms of objective, will it be able to accelerate the economy? Because the economy in India has survived the COVID storm, will the budget accelerate it?
See, according to me, there are various long-term messages of the budget. First of all, I think the tax to GDP ratio in India is this budget of this year's collections, which I think will be far higher than the budget estimates, is giving us an indication that the tax to GDP ratio in India is going up. Only when that happens, we'll be able to spend money for social welfare and infrastructure. I think that's a very important message. Then I think by not giving away freebies beyond a point, they say that you give a man a fish, he will eat it every day. You teach him how to fish, he will be on his own. So according to me, the real panacea of India's teeming billions is growth. It's only with growth that you will have greater jobs, greater social welfare. And the manner I was reading about how, the government is ready to subsidize $10 billion for the manufacture of chips in India. So also there is a lot of strategic thinking in India, in government. So I think growth is the priority, I think is the most important thing for the long-term benefit of all Indians. Poor, rich, whatever. Second thing I feel is, everybody is emphasizing the jobs that will be created by the kind of investment that is being proposed in infrastructure. I think the government investment is important. I think there are going to be far greater private sector investment. If you look at anybody, Mr. Adani, Mr. Ambani, Mr. Agarwal, Anil Agarwal, right, they all want to invest in India. And I think which very important, which nobody has mentioned, everybody is emphasizing on the expenditure on infrastructure, but what will the expense on infrastructure lead to? It will lead to industry being more competitive and efficient. Let's not forget that. I think that's also a very, very important element of the increase in capital expenditure for infrastructure. And it is a bold political statement because that government has preferred growth and fiscal prudence over populism. I think that's a very, very big message. And whatever India is doing, whatever Mr. Modi and his government is doing, is towards long-term sustenance and not short-term gain.
Do you think there is a big change in the policy making in India? The budget document is very transparent. There is no changes in taxes. When COVID taxes or some tax changes could have come out, the policy making is far more clear and it's much more stable in terms of supporting the entrepreneurship.
See, it's like this. Ultimately, India will be built by entrepreneurs. Right? Government has no reason to be in business. And I think Mr. Modi has said this in Parliament. And he wants to respect and encourage fair risk-taking. I think there is no capitalism in this country, there is no socialism, there is realism. And the kind of transparency government is coming out in finance is absolutely, it's very, very encouraging. Today we have the highest foreign exchange reserves, right? We have a very transparent budget. We have no off-balance items now. FCI has been repaid, Air India debt has been repaid. I am personally very optimistic that the tax to GDP ratio of this country will really go through the roof. And this will really allow fair and good government spending.
But is this high risk also coming at a time when in general inflation is high, and this budget on the expenditure side, if the supply strain constraints are not taken care of, could stroke up inflation?
Well, I don't know whether it can stoke up. See, most of the inflation is commodity inflation. And a lot of the commodities are linked to international prices. So India's consumption, increase in consumption of 5% is not going to lead to spike of commodity prices. India is not still, even now, not such a big consumer of all commodities. That Indian consumption going up can really lead to a spike in commodity prices. And really food inflation is not much at all. And 4-5% inflation is desired.
4 to 6% is the average inflation for India. So are you looking at an economy like never before? For the first time, government has a problem of abundance. Corporate balance sheets are not leveraged at all. Retail balance sheet, with the exception of rural balance sheets, it has made a comeback. So it's never been this good for India, can I say that?
That's why I'm saying that the credit cycle is behind us. The capex cycle is ahead of us. We have a refreshed corporate sector, right? So now, and sir, we are 140 crore Indians. जहाँ 2 लाख रोज पैदा होता है खाने के लिए, वहाँ काम क्या मंदी होगी? So I'm very, very optimistic. I think also I must say that although the budget figures have been conservative, the economic survey has predicted 8.5% real growth. So I think India is now dreaming on 10% growth and is not way there. But what is more important also, the ease of doing business, the change in the government's attitude. The PLI scheme, I think, can be a big hit. And next year, I think there will be, don't forget, 60% of India's economic services and transport, trade, hospitality, which is a large contributor, was very badly affected last year. So the growth next year in these 3 areas is going to be very high.
So we are on a new credit cycle. That credit cycle has embarked. That new capex cycle has embarked, earnings cycle has embarked. How will this earnings cycle or the credit cycle will be different from the last cycle?
Well, I don't see any reason to see how it will be different. There will be growth in corporate profits. We are at 4% of GDP in corporate. America is 10-11%. We were 8% in 2008. So I think we in the next 4-5 years will reach 8% of GDP. So you can imagine in 4-5 years if the GDP is say 40 lakh crore, 5 lakh crores, then our profitability of corporate sector can be, if you go at 8%, unbelievable. 40 lakh crores.
No, when I say not the extent of the profit cycle, but the nature of the sectors which would contribute, because last credit cycle or the last earnings cycle was power, cement, steel. Will it be different from that?
No, everybody will be profitable. I would say that I don't see much difference in this cycle in IT. I mean, IT, because India is an exporter and a very large exporter, so IT is eternal. But I think, I'm very bullish on metals, on infrastructure, on hospitality.
Is the inflation fear, both locally and globally, overdone?
That only time can tell. But there are factors in America which are going to reverse, which is price of second-hand cars. Certain factors. I think people feel there is a wage spiral in America. But I feel that a lot of people at the bottom who are given the checks, just checks were posted to them. Once that get over, then they will have no choice but to come to work. So difficult to say, what is in favor of inflation not exceeding estimates or expectations. The fact is that the biggest printer of money in the world has been Japan. And there is no inflation in Japan of whatsoever kind. So essentially low inflation is linked to demographics, right, where population doesn't grow, and to technology which allows cost to come down.
Now, we've seen a panic in the global equity market after Fed changed their policy stance, let's say in December and early Jan. But US bond markets have been very mature. The 10-year paper is still not gone north of 2 or 3 or 3.5%, which this kind of an inflation. Why is that, sir?
Because, in America, the American interest rate is supposed to become 1.25%. What is 1.25%? right? So I don't think, the stock market has gone up in every rate increase cycle. So I think what I'd say is I cannot predict exactly what will happen in inflation, but what I feel is market is prepared for inflation.
One of your favorite quotes is that interest rates, they act like gravity. Now we can debate whether it's going to be 3 hikes or 4 hikes, but globally and locally also we will come out of a patch of unusual low interest rates. That is over for sure. When will the law of gravity of higher interest rates start affecting asset classes?
Well, see, when there are boom periods and I don't know about America, but India, the space it is in, I don't think any increase of interest rates of 100, 200 basis point is going to affect corporate investment, or where it could affect is in consumption of houses. Because you can't have the 10-year at 6.8 and the home loan at 6.5. I don't think any other sectors are going to be so badly affected.
At the start of the year, there were 2 events which everybody wanted to look forward to. One was the Fed and second was budget. Both the event risks are behind us. What is the next big thing for rest of the year market should look forward to?
I think the end of COVID. I think that's the most important thing. And continuation of the disinvestment of the government.
From a market standpoint, is COVID adjustment is history now? Have markets moved on?
No, that nobody can predict. See, we have only a 2-3 month period where we don't see any new variants, and this becomes like a common cold. Then I think we'll move ahead. But more and more the attitude of government is to allow normal activity. Or who suffers, it's a small, it's like a cold, any other cold. Only thing it is very, very infective.
I asked you this question last Feb. I'll go back to that question again. It was a question based on the Mumbai train journey from Churchgate to Kandivali. If the bull market starts at Churchgate, goes to Kandivali. Last March you told me the bull market has reached only Churni Road. Has the bull market reached further?
Maybe from the start of the Churni Road station to its end.
Okay, so still a long, long way to go. Would you be surprised that in this bull market, Nifty goes below 15,000?
Well, anything can happen, and the Nifty goes to 15,000. That's not the reversal of the bull market, but I think it's highly unlikely.
The selling what we've seen, it's not a selling, it's a meltdown in global technology stocks. Was that overdue? Is that over?
It was not a meltdown in global technology stocks.
Internet stocks.
It was a meltdown in bullshit valued stocks, and all the SPACs and the dreams, where you was not selling earnings, but you were selling dreams. I think it's a very healthy correction.
Has realization dawned on investors that ultimately it's about buying companies with cash flows and don't buy dreams but buy reality?
Why we have to teach them whether they dawn or not? See, it is history. If there is one truth in history, that ultimately earnings are slaves of cash flow, valuations. So anybody may come in for a temporary period, but it's not going to make a difference.
You were bullish on 2 sectors. We've been very vocal about it, metals and PSU banks. And the great example you shared with us was Shree Cement 55 के पी पर कैसे ट्रेड कर रहा है, टाटा स्टील 5 पर क्यों कर रहा है. It should correct. Metals have made a reasonable comeback. Are you still bullish on metals?
Yes, I am.
Why is that, sir? If I may just ask
Well,
you a
I
follow-up
think,
question.
the EBITDA of Tata Steel this year will be more than the EBITDA of the entire cement industry. And the valuation is 5%, 10% of the cement industry. And I feel that the margins, maybe the peak margin of the Indian operation was 30,000. I think in the longer term, 24,000-25,000 rupees per ton margins will sustain. And with their expansion, 60,000 crores could be Tata's Steel's base EBITDA.
As an investor, how excited are you about Air India privatization?
Well, I'm an investor, trader, everything in Tata Steel. I have to take everything with a pinch of salt. I'm very happy. I only feel that with due respect to Nehruji, that we bought it from the Tatas, we incurred loss of 1 lakh crore, and we sold it back to the Tatas. So I don't know what purpose it served.
So can I say that this time around, one of the biggest conservative estimate, apart from the tax collection by the government, is in the disinvestment target?
See, I think in a disinvestment they have done right. Because there is great uncertainty there. Right? So, if it comes more, what I feel is, I thought they were not going to disinvest, but after seeing the reaction and the interviews of all the bureaucrats and the chief finance minister, I feel they are going to actively disinvest. But they don't want to take credit for it until, because they don't want to have a situation when they take credit and it doesn't happen.
Fair point. PSU banks, they've done very well. You said, look, that was a sector which has underperformed for 10 years and you identified great value in that sector in 2020. The stocks have run up. Is that re-rating over?
It just started.
Okay. Why do you say that?
Why? Because I feel so. I think the prices are going to go much higher.
Is this
Titan, when it went from 40 to 150, what did you think? The Titan of its low was 30 rupees. It went to 150, and today I think the effective price is 50,000.
There's this famous chatter amongst a lot of global brokerages that Indian markets are trading at a premium to other emerging markets.
So they sold 1,37,000 crores. It has been absorbed. See, the markets are placed. आपका जो ओपिनियन है ठीक है ना यार, आप भगवान नहीं हो. You sold, what happened?
This is something you've been telling me always, that watch Nikunj, domestic investors will come back and they have come back. Are they here to stay? Is that asset allocation change here?
People say 8 crore demat accounts are opened. What about the 80 crores? India will have, in time to come, $2.5 billion of savings. Where is it going to go? $2.5 trillion.
So this is just the beginning of what could be called as a shift in asset allocation by Indian investors, according to you.
Yeah, first into financial assets and percentage of financial assets. See, there are 4 ways of saving. One is real estate, jewelry, you invest in your own business, or in financial assets. So the percentage of investment coming into financial assets will go up dramatically, savings will go up dramatically, and the portion of financial assets coming to equity markets will go up dramatically. So it's going to be a big whammy.
The premium what Indian markets are commanding, sir, we are trading at a premium to other markets. Is that justified?
But we are always trading at a premium. Japan at the bottom also had a higher P than America. So we are always trading at a premium.
And there's reason to believe it will only stay like this because of earnings, corporate governance, government policy.
The day people start having growth of the Indian economy, and we reach corporate profits, say, of 8% of GDP, at that time they will contract.
Rakesh Jhunjhunwala, at the beginning of the COVID, said, I'm a very happy investor in Tata Group of companies. And some of those companies have seen remarkable turnaround, whether it is Tata Motors, whether it is Tata Consumer, even Tata Communication. Is that one time depressed re-rating behind Tata Group of companies?
I cannot answer that question. Whether it's behind us or ahead of us, I'm very bullish on the prices still. I still think there's a long journey.
Tatas are trying something very interesting, which is that they are going very big in the EV chain, through Tata Motors, through Tata Power, through Tata Chemicals. Are you excited about that EV space, what's happening and what Tatas are trying to do?
Well, I'm very excited about the vehicle space. I think they will become the biggest player in India and also in the developing world of electrical vehicles.
Last time you shared with our viewers...
nobody can... Where in the world can you get an electric car for $10,000?
So last time when we met, you said, look, Tata Motors, with the disclosure that you have invested in it, is at a verge of a transformational change. Which is the next Tata company at the verge of transformation?
I am searching. When I find one, I'll call you.
But in general, your thesis about
at the moment, I have not any.
No, I'm not asking you for any.
But I have not seen any company here which is good.
No, the thesis of why you liked Tata Group of stocks, because you said Chandra is cash flow oriented, he understands technology, he understands skill, and he talks about size.
And he's a sensible risk taker. An aggressive but sensible risk taker.
So your thesis and your belief as the Tata Group and what Chandra is doing, that belief is in.
Absolutely.
You mentioned about PSU banks, but in last 1 year, private banks have also not participated. HDFC
That's
Bank.
exactly my call. that the public sector banks are going to outperform the private sector banks by far in price performance over the next 3 years.
But sir, if the credit cycle starts, private banks will also do corporate lending.
No, they will do corporate lending, but they were already doing it, no? And their cost income ratios are low. Their debts, their NPAs were low. So you have seen the best of the private sector. And what is the difference of valuation? After doubling, the market cap of Canara Bank is 45,000 crores. And it has a book as large as ICICI Bank. So I'm not saying the banks, or the other banks will not outperform. I think the PSU banks will outperform.
Fair point. 3 of your private companies have gone public in last 2 years.
Yeah.
Nazara, Metro, Star.
Yeah.
Where do you see more value as an investor, private space or public space?
Well, I have no... See, the only rule I have is there are no rules. So, therefore, we examine situation, company by company, situation by situation. We don't, reserve our mind कि public है, private है.
एक मैं quote निकालता हूँ. ये last March की quote है. Rakesh Jhunjhunwala said that I'm very excited, and if you give me 5,000 crore, I can shop in a week. So if somebody gives you 5,000 crore, so you right now are saying that you can see enough opportunity in the market.
Yeah, if I have money, I can see a lot of opportunity.
So you're fully invested, I can assume that.
Yeah, I'm in debt.
Mr. Jhunjhunwala, there's one quote of yours which you've always expressed on various forums, which is that I have made my money by trading, but an average investor should not trade. And it goes on to say like this, that daddy कहते थे whiskey मत पियो पर खुद पीते थे. Why is that? Why should one not trade?
Because there is empirical evidence that if 100 come to trade, 99 lose money. But trading is very exciting, so people want to do it.
If you have to divide the market into, let's say, 2 or 3 parts, that's what you always do. India has a market cap of $3 trillion. How much of the market, to your mind, is overpriced? How much of your market is underpriced?
See, I am looking at my stocks, right? Why should I? Titan has been overpriced for all its life here. If I had done all this theory and overpriced and underpriced, I would have sold Titan at a value of 2,500. Today it's 50,000.
Why does that happen? Why do stocks sustain such high P multiples?
Because there is corporate governance, there is growth prospects, there is transparency, there is cash flow, there is market leadership.
There are 2 types of expensive stocks. One, like you said, companies which were made on imagination and valuations. And second are companies like Titan or an Asian Paints or, for that matter, Pidilite. These are great companies, but they are expensive. What is the future for the latter, which is good companies, but P multiples are out of whack?
Well, the P multiples may correct, so you may have discounted next 2 years' earnings. But what after that? I can tell you one thing, I have sold 5 crore shares of Titan. And whenever I have sold, the price has gone up.
In 2010, I'm going to take the clock back 10 years. And we were at Oberoi at an event, and you said, if Titan does not become $1 billion investment for me, I will take that investment to my grave. Would you like to extend that list now with some more names?
Kiska, I don't know. I don't think I have any other. Maybe I have in Star Health. So I have 2 investments which are individually $1 billion. Of course, Titan I think is 1.75 billion. This and Star Health.
Is the worst behind the health insurance sector now because of that COVID accounting?
Hopefully.
This is an amazing sector, sir, isn't it? Because the need of a health insurance has increased and numbers are not there.
But ultimately, if the claim ratios don't come down, you'll have to increase the premiums.
You're reasonably confident that healthcare as insurance is here to stay.
One is, of course, the COVID. Second is there is aggressive increase in hospital costs. There is an inflation of 40 to 50% in hospitals in the last 2 years. And this is not going to go away.
But you own hospital stocks and you own healthcare stocks. As in, when I say healthcare stocks, Star Health. So can they both coexist? Because one has to lose for other to gain.
No, that's not necessarily. Both can gain.
Both can gain. Somewhere are you disappointed as an investor about pharma?
I am not disappointed. I did not choose the right companies. So I'm disappointed with my judgment rather than about why should I blame anybody.
But something keeps on periodically going wrong for the farmer. Sometimes it is pricing power, sometimes it is US FDA. There are multiple challenges. What all of us thought, let's say a couple of years ago, that pharma will go the IT way, the bent of the curve has been very different.
Yeah, it has been different. The US generic market has not been very healthy, partly because of the COVID.
Everybody is talking about the risk which is associated if there is a crypto meltdown. Could that impact other asset classes in a risk-off environment?
Yeah, it could, but see, there the class of investors investing in equity and crypto are totally different. And once crypto, I think crypto will collapse one day. Where will they invest then?
But you don't see an impact of crypto meltdown impacting other assets. It's not become that large that leverage could backfire. Rakesh Jhunjhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I don't want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
Some of our common friends are telling me that Rakesh Jhunjhunwala has decided to go easy on trading. Are the rumors right? That Rakesh Jhunjhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, a couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो trading में वो छुट्टी नहीं है.
Once a trader, always a trader. Since you have technology investments, I'm sure you are abreast with the meta avatars which everybody is talking about, the meta world, right? Okay, meta world is you take an avatar. So if Rakesh Jhunjhunwala has to take a digital avatar, what digital avatar you would like to take in the meta world? Or maybe we can keep this question.
Let me tell you.
Okay, so we'll keep this question for next time. Last time when you met, or first time when we met Shraddha Kapoor in a Diwali interview, you said, I'm not sure about my daughter, I'm not sure about my elder son, but my younger son is definitely interested in markets and I'm teaching him. How are you teaching him? What are you teaching him?
Formally, only in the 8th standard, but he's very much interested.
Can I go back with this broad message that now things are exactly as what you had shared with us? We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that way. But time is like, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
All that difficult to predict. Return will be more than that.
I'm saving the bear market question for the last, which is that what are the 2-3 factors which will convince you that either this bull market is maturing or this bull market has not gone as per what you thought? What are those factors which you would consider?
I think the biggest risk is geopolitical and the continuation of Mr. Modi as a Prime Minister. Because then we know what policies are coming, there is stability, there is business friendliness. I think these are the 2 vital factors.
And I'm just tempted to throw in one small question, which is that, again, the view on the street is that we had a good 2021, double-digit return for indices, more than 40-50% for small and mid-cap indices. This could be a flat year with low return. Do you think this will be a flat year with
no
low return?
No, I don't think it's flat year. I think we'll have return.
That's the headline. So what do you think is in store for this year?
I mean, I can predict the direction, I can't predict the depth.
The quantum, you think
quantum
is going to be?
I can't predict the quantum.
No, when you say it will not be a flat year.
I don't try to predict myself, what can I tell you?
I completely respect that.
I don't think it will be a flat year, I think it will be a positive.
It will be a positive. That's the number which we're looking at. You think this will be a positive year. So really appreciate your time. So glad you could join us. You've been very generous with your time. It's market and you've given us a lot of your time. Really appreciate that.
Thank you.
Thank you, Bhaiya.
98% of the money made in the stock market is by being a bull. Not necessarily a big bull, but being a bull.